Danone drops €1 billion on Idris Elba's nutrition powder, and we're supposed to pretend that's the biggest food news today.
Idris Elba selling meal replacements is peak corporate theater. I love it. But no, the real story is Unilever dropping $44.8 billion to buy McCormick.
Exactly. Forget the celebrity vanity projects. We're talking about the absolute monopolization of mayonnaise and garlic powder.
You say monopolization, I say synergy. Though speaking of Hollywood vanity plays, wait until you hear what Netflix just bought from Ben Affleck. The rundown. I am still trying to process the mental image of the Danone yogurt executives sitting across a negotiating table from Idris Elba.
€1 billion for Huel. $1 billion for powdered food that tech bros chug when they forget to chew.
Hey, it is a lifestyle brand now. But seriously, private equity has been completely dominating food and beverage megadeals lately. Danone had to pay a massive premium just to keep the PE guys out of the room.
I looked at the growth metrics in the footnotes. It is a steep price for oats and pea protein. I do not buy the valuation.
You never buy the valuation if there is a celebrity attached.
True. But speaking of tech bros, OpenAI is just treating the open source community like an all-you-can-eat buffet right now. They just bought Astral and Promptfoo.
They are internalizing the whole ecosystem. It is smart defense. Buy the shovels before anyone else can dig.
It is aggressive, just like Legrand quietly expanding its global footprint. They just grabbed Keydak in China and TES in the UK in one dual sweep.
Data centers are where the quiet money goes. But if you want loud money, look at biopharma. Biogen just dropped $5.6 billion on Apellis Pharmaceuticals.
Which is absurd. That kidney disease portfolio is absolutely not worth 5.6. They overpaid.
Oh, come on. Apellis has a pipeline that Biogen desperately needs. They are buying time.
They are buying a prayer, and it caps off a $46.8 billion first quarter for biopharma M&A. People are panic buying pipelines.
I would rather panic buy a drug pipeline than whatever Ben Affleck just sold to Netflix.
Wait, really?
You missed this? Affleck just sold his AI post-production startup to Netflix.
Ben Affleck had an AI startup?
Apparently. Netflix bought it right after they officially dropped out of the Warner Bros. Discovery bidding war. Paramount Skydance is taking the whole media prize now.
Regional experts are warning that South Korea's M&A market is completely frozen from geopolitical risk. But sure, let's fund Batman's AI side hustle. Unbelievable.
That is the magic of Hollywood deal-making. Capital always finds the most entertaining home.
Well, if you think Danone overpaid for protein powder, wait until we look at the actual food mega deal of the week. Unilever and McCormick are combining their food divisions.
$44.8 billion of pure spice plus Brookfield's massive wealth play. The big one. $44.8 billion. I just have to say the number out loud to actually process it.
It's a staggering amount of money for what is essentially a mayonnaise and paprika mega merger.
Oh, come on. You're completely underselling McCormick. They practically own the entire spice aisle globally.
I know they do, but combining Unilever's food division with McCormick? I read through the investor presentation this morning, and the synergy targets feel entirely fabricated. They keep throwing around the phrase flavor ecosystem. What does that even mean?
It means margin control, Maya. Look at it like a banker for a second. Spices are incredibly high margin. Condiments are volume plays. Unilever wants that premium shelf space and the pricing power that comes with it. It's a massive moat.
A moat made of garlic powder? I'm not buying it. Unilever has been trying to streamline their portfolio for years. Remember the ice cream spin-off? Now they're bolting on a massive, highly complex agricultural supply chain. The integration risks here are an absolute nightmare.
But you have to look at the broader landscape. Market analysts are pointing out that private equity firms are maintaining absolute dominance over these high-value megadeals in food, beverage, and agribusiness. If Unilever didn't make a huge strategic play, a PE giant would have scooped up McCormick and squeezed the margins anyway.
So their grand defense strategy is just getting too bloated for private equity to swallow.
Exactly. A poison pill, but it tastes like Old Bay.
Okay, I'll admit, an Old Bay flavored Hellmann's mayo might actually crush it in the Midwest.
See, the synergies are already working. I'm telling you, reshaping the global food landscape takes big, expensive swings.
I still want to see the actual footnotes on how they value McCormick's commercial restaurant contracts. But while we're on the topic of massive, expensive combinations finally crossing the finish line, we should talk about Brookfield.
Right, Brookfield Wealth Solutions officially closed on Just Group $3.2 billion.
Which completely rewires the UK wealth and retirement market. Brookfield isn't playing around here. They wanted a massive foothold in UK annuities, and they just bought the most strategic asset available.
It's the most classic Brookfield move ever. Find a cash-heavy, incredibly boring business, buy it at scale, and optimize the absolute life out of the balance sheet.
Boring, sure, but highly regulated. The compliance hurdles on this took forever to clear.
Worth the wait if you're Brookfield. You get the assets under management and you figure out the rest.
Speaking of waiting, we finally have an answer on the Warner Brothers Discovery bidding war.
Yes, we do, and it involves Netflix walking away, Paramount Skydance securing the prize, and somehow Ben Affleck selling an AI startup.
I have so many questions about the Ben Affleck part. Hold that thought. We will get into the media gossip right after this break. Icclast. Voices.
I was reading this analyst note this morning claiming private equity is maintaining, quote, absolute dominance, unquote, over food and beverage megadeals.
Absolute dominance. Did they sleep through the Unilever and McCormick announcement?
That is what I thought.
That is a $44.8 billion strategic merger. You cannot just ignore a literal global food monopoly forming in plain sight because you want to push a PE narrative.
To be fair to my former brethren, private equity is still doing a lot of the heavy lifting. Mountain Gate Capital just bought Upswell.
Upswell is marketing, Nate, not food. If we are talking food, Danone just scooped up Huel for €1 billion. Another massive strategic deal.
Wait, Huel? As in the liquid meal replacement that tech bros drink so they do not have to chew?
The very same, backed by Idris Elba, actually.
Idris Elba is backing tech bro gruel? That breaks my heart a little bit.
He is probably cashing out, so do not feel too bad for him. But my point stands. Analysts are completely ignoring how aggressive strategics are right now.
Okay, I will give you that one, but what about the regional experts writing off South Korea? They are saying geopolitical and macroeconomic risks are severely killing buyer appetite.
I actually agree with that take. The risk pricing over there is completely out of whack right now.
I do not know, Maya. Whenever I hear macroeconomic uncertainties, I just hear bankers making excuses for why they cannot close their deals. It is the ultimate catch-all phrase.
Oh, come on. You know the cost of capital in that region has fundamentally shifted. They are not just making it up to hide a bad quarter.
Maybe. I still think there is a lack of creativity in structuring. But speaking of getting creative, we need to talk about Ben Affleck selling an AI startup to Netflix. Spill the tea. So Netflix just bought Ben Affleck's AI post-production startup, which is hilarious to me because I just picture him in a Dunkin' drive-thru pitching algorithmic editing tools to Ted Sarandos.
I actually looked at their tech stack. It's surprisingly robust. They automate color grading and audio syncing for massive unscripted shows. Netflix needs that exact kind of margin efficiency right now.
Sure, but Netflix is making much louder noise by what they aren't buying. They officially walked away from the Warner Brothers Discovery bidding war.
Good. The math never worked. They dodged a bullet.
Are you kidding? It leaves Paramount Skydance an entirely clear runway to secure the biggest media prize of the decade.
Prize? Nate, WBD has a mountain of linear television debt. Calling it a prize is pure banker spin. Skydance is buying a melting ice cube.
A melting ice cube with Batman, Harry Potter, and Game of Thrones in it. The IP library alone justifies the premium. You put that in the Skydance engine and it prints cash.
IP doesn't magically pay down $30 billion in debt. I'll believe the Skydance synergy numbers when I see them in an audited filing. Right now it's just a very expensive ego play.
We love an ego play. Speaking of wild valuations and celebrities, Danone just dropped €1 billion on Huel.
€1 billion for powdered nutrition.
Idris Elba-backed it. You're paying for the Elba aura. It makes drinking beige sludge feel cinematic.
I read the press release. Danone is desperate for younger demographics, but $1 billion for a brand that essentially sells glorified adult baby food to tech bros? The revenue multiples are completely detached from reality.
Tech bros need their macros, Maya. And Danone knows private equity is dominating food and beverage megadeals right now. They had to pay up or lose it to a sponsor who would just flip it in 3 years anyway.
Fair point on the PE pressure. But speaking of paying up, I want to look at the commercial banking sector tomorrow.
Oh, right. Bank of Hope is moving forward with the SMBC Manubank deal. We need to see if that actually clears the regulatory hurdles. Tomorrow's radar.
I am setting my alarms for the Bank of Hope filings tomorrow morning. We should finally see the paper on them taking over SMBC Manubank's commercial unit.
You actually care about that? The real Asian market story right now is South Korea. Buyer risk appetite there is totally cratering from geopolitical stress.
I care because it shows exactly how regional banks are pricing commercial assets. Same reason I am watching Count Limited file on that $72 million Oracle Group deal.
72 million? Maya, we just talked about a $45 billion spice merger. You were looking for loose change in the couch cushions.
The couch cushions are where the actual multiples hide, Nate.
Fair. But if you want real entertainment tomorrow, I am waiting to see what Netflix paid for Ben Affleck's AI post-production startup.
Wait, really? Batman has an AI startup?
Had Netflix bought it today? Goodwill hunting for yield.
That was terrible. Catch you all tomorrow.